Alright, so in this video we're going to talk about the aggressive pricing versus non-aggressive pricing in a live chart example. So as you see over here, we have an area where prices made a breakup structure to the low side and breakup structure to the upside. Right? You can see prices starting to push bullish here. If you zoom in here, you can see what's happening. When there is a breakup structure happening, right over here, you can see how price is struggling to come back down to the downside, right? And then prices shooting all of a sudden quickly to the upside. It is struggling, however, to push to the upside, but it is, however, struggling to go to the downside as well. Okay, you can see when price did extend over here, it overextended. All right, this shows us that there's power in the market, that there's aggressiveness in the market. The price is interested to go to the upside. All right, and when price started to come back down, it was rather quite aggressive until this area over here. Price was rather very slow and sluggish over here. Price didn't really create a bunch of liquidity to the downside, although it started creating liquidity here when price reached the area of demand, and then price started pushing off rather aggressively here. Okay, so once price started reaching aggressively over here, if you look at this example here, we had an area where price broke aggressively, retraced back slowly. If you notice what's happening here, the retracement is rather choppy, creating liquidity, creating internal liquidity and external liquidity like this. And then we waited for a price to start changing, for orders for prices to continue bullish. You can see we had a rather nice extension to the upside, rather fast and quickly and rapidly, while liquidity was taken out from the external side. All right, once price reached to the highs, you can obviously see here price is still retracing slowly. You can see it's struggling to retrace, obviously, back to the downside. Bulls are wanting to push price up, but the bears here are trying to push price low. And then if we look at this example here, okay, if you zoom out here, this is the major structure formation. If you zoom in here, you can see obviously that prices are still going bullish. When the bears were trying to go, when the bears were trying to pull back here, you can see price was just very choppy and very sluggish over here. Prices extended, came back as well here. Notice this retracement that's happening here. Prices are just trying to push up, but bears are trying to push price down. And then what do you know, over here we see an area where prices have touched a demand area, and then prices pushed up very rapidly. All right, this is a sign for us that's telling us price is still interested into the upside. If we zoom out here, you can see the major structure formation. You can see all this here is where liquidity is being built. Price was struggling to retrace, obviously. Price was slowly pushing to the upside, and then all of a sudden prices shot below. This is a rather sharp retracement, very strong impulsive movement to the downside, taking out this liquidity. Obviously, this liquidity here is known as an area where price was working on retracing, but bulls were pushing up and bears were pushing, trying to push down, obviously. So there's an area where buyers and sellers were happy with each other here until prices just took this impulsive movement to the downside. And then you can see here how price touched our area of demand and then started to shoot up quite rapidly. If you compare this pricing and this pricing, it's two different, obviously, in terms of movements. We can obviously see that this retracement was quite rapid and it was really fast compared to this retracement. But it is obviously more. They're two of the same things, meaning that this retracement is more aggressive compared to this one, although this retracement is more aggressive compared to this one. So in the essence, you know, if we understand how structure works, obviously when prices are breaking, we obviously expect that area for price to retrace in a non-aggressive fashion, although this was pretty aggressive. When aggressive retracements happen, we do need to be weary about them. We do need to watch out for this. for these retracements, because they could indicate that prices could just break below, or at least come and tap your demand, pull up a little bit, and then crash below like this. All right, so that is sometimes it's a rarity on its own that happens, but in any case, there are times when prices are struggling to push back up, as you see in here. And it's done a good job extending compared to this retracement. Okay, this was the original retracement that was supposed to retrace right here because it was struggling, but then we had a sharp move to the downside telling us price is interested to go to the downside. This is a risky entry here based off of the the huge impulsive retracement to the downside, although price was able to shoot up quite aggressively in a decent formation. Now, as we zoom out, you can see obviously what's happening here. This impulsive move to the downside gave us a reason as to why price is pushing to the downside, because obviously in this area here, this impulsive move to the downside, you can see that prices are interested in going to the downside, going bearish, right? You can see it was very impulsive to the downside, then price struggled just a little bit to go back, retracing to the area of supply. And then now we switched areas of interest where sellers are wanting to go down. You can see again, we had quite aggressive move to the downside as well. And then prices are struggling to push back to the supply area where prices need to retrace back to the supply area. Notice how there's a huge area here where prices are consolidating, ranging. All the buyers and sellers are happy with each other. Therefore, this is not a typical retracement that you see. It is a rather unhealthy order flow, which also gives us the sign that prices are not going to go bullish at any time soon, that bears and bulls are very happy with each other here, and that movements potentially to the downside is going to happen. We just need to wait for prices to come and touch our area of supply for the moves to start happening, to take off from here. As you see, we had an area where price hit supply. It pushed very aggressively. And then the bulls came up here aggressively, pushing to the upside. So this is an area where you should be weary about. It's not to say that this is not a healthy area to look for sells, although we do need to be worried about, because there's aggressive movements to the downside and aggressive movements to the upside, which can also gives us a benefit of the doubt that prices may not, move to the downside quite just yet. As you see this extension that pushed all the way back up, this retracement actually, you can see that another aggressive move came into the market, which also gives us the chance now to say that, okay, well, maybe this is an area where we can sell off right here. And then prices obviously overextend on the long run. As you can see, prices were struggling to the downside a little bit. You can see here again, we had more equal buying and equal selling, a lot of equilibrium happening in here. We did have an aggressive move to the downside, and prices are now starting to retrace back to an area of supply. Notice again, every time when price breaks structure, we do need an area. We do need the buyers to come back, although there was a lot of order flow, unhealthy order flow here, as you can see, going sideways range, and then bullish up to this area here, going up like this. This is very unhealthy, obviously. And then, as you know, once we reached area of supply here, notice what price did. Price pushed very aggressively, impulsively down to the downside, breaking all this liquidity. Price was creating liquidity as it was retracing back to the upside, and then just took out all that liquidity very aggressively, only because we're selling in the correct, we're trading and or selling in the correct market, in the correct trend. Once price broke this area of structure, it broke impulsively. You can see this area here is struggling to push any lower, so there was an area where buyers and sellers were looking to, buyers and sellers here are happy with each other, and therefore we had an impulsive move to the upside, trying to match this huge area of retracement. This area here is an area where price is trying to retrace back to the area of supply, and you can see, as you see over here, we had an area where price is impulsively moving to the downside. breaking more structure. Okay. At times you're going to get areas where prices are impulsively moving down and then impulsively moving to the upside. Okay. I really just want to show you sort of the two measurements. The two areas of where prices are impulsively moving to the upside or impulsively moving to the downside. Only because we need to pay attention to how prices behaving in and around these areas. Okay, so it doesn't generally mean that just because it's moving. For example, if price is moving to the upside like this, right, and then price is pushing down to the downside like this, all right, retracing, it does mean that price is weak, right, and then we're looking for another sharp move to the upside like this. But like I said, at times you can get where prices are moving impulsively to the upside and all of a sudden moving impulsively to the downside. And this is just something for you to keep an eye on and to pay attention to, that price may have the excuse to pull up a little bit and then break to the downside like this, and then you would understand why this impulsive movement to the downside happened, all right, rather than having a smooth retracement to the downside like this. Price is going up, right, and then we have a rather choppy, unhealthy order flow going to the downside, and then we're looking for that extension like this, right? But rather, price just builds up like this and then starts shooting down. If this formation happens, something like this, okay, it's rather impulsive, rather strong, right, to the downside, so we need to be wary and careful with that. Same thing goes for the downside. When prices are pushing low like this, and then you're looking for, there's sharp moves to the downside, then an upside like this. Be very careful. Have your alert sign on and make sure you understand that prices may continue to the upside like this instead of going to the downside, because we do have impulsive moves to the downside and then another impulsive move to the upside like this. All right, the best times to look for in order, if you're ever looking to trade, let's say again to the upside in this case, always look for unhealthy order flow when it's pushing back or retracing. Again, just want to show you again that you can see clearly here we had an impulsive move and then prices retracing, rather an unhealthy order flow here. Prices, buyers and sellers are happy with each other here. We have a range bound retracement, and then all of a sudden price breaks up impulsively, breaking the buyers and the sellers, or at least hitting out the buyer liquidity area here, then working back to retrace back to that area. Now, a move like this is very interesting. Okay, I know I'm repeating everything over, but I'm really trying to show you the contrast between the two in terms of the healthy and unhealthy order flow. You can see we had a rapid extension, right? And then when price retraced again, it was very rapid to the downside. But we've noticed that price was able to hold this demand area with this area of range right over here. Therefore, this is unhealthy for us. And then you can see another impulsive move to the upside. And then you can see again another impulsive move to the downside, which can be unhealthy. We may want to be wary and careful that price can do something like this and then push to the downside like this again, only because there is impulsive movements happening, right? But the only way we can really get some good confirmation that the impulsive movement isn't pushing down anymore is when another impulsive move happens to the upside, because we are following the trend. The trend is up, right, like that. So we know that if price breaks above a previous the next high like this, right, we know that we're expecting for lows to come in here to look to respect this area of demand, but then prices take off. We do see prices are not lagging here, right over here. Prices are pushing up. It is still impulsive. It's not a clean impulsive move like this as we like, or like this, right? It is still impulsive. It's not as choppy as most pricing, as most retracements are, like this. This is very choppy, a very choppy retracement, right? You see a break of structure, price is pulling back, here you can see there's a huge impulsive movement, and then you can see here the price is just choppy back in a unhealthy order flow fashion. Okay, and price moves impulsively back up to the upside like this. This is what we need to see in terms of, and this is what we need to know in terms of contrast. You know, if we're going bullish, we need that unhealthy order flow to push back, to pull back, to tell us that prices are rather weak and that we're still in the correct trend. Buyers are still interested in going up. All right. Once this healthy order flow has happened, you can see again, right? Prices break above structure. Very simple, very easy. You can see more unhealthy order flow and then another extension to the upside. Okay. Again, you can see this huge extension happening. We're expecting for price to come back to this demand area. A lot of unhealthy order flow is happening here, and which is beautiful for us because we know that, you know, if there's any chance of prices coming down here, we're looking for price to obviously get to this area and then to touch this area and then switch, give us a change of character for price to impulsively move to the upside. But knowing that we're in this area, this is an area of a great supply area on the higher time frame. Here you can see prices moved impulsively to the downside, and they rather moved impulsively to the upside. Okay, they both had an equal amounts of buying and selling happening here in terms of extensions and impulsive movements. This is a rather healthy retracement, just like this extension here, this huge extension. Although, like I mentioned, we do need to be weary when prices do give us that healthy extension, or I'm sorry, that healthy retracement back to the area of supply in this case, because it is a downtrend. We do need to be weary, and then we do need to be careful when prices are switching hands here, or doing a change of character. Okay, this is a clean sign that prices is doing a change of character, and then now we're looking for prices to be weak in and around this area, as well as the retracement here. Right here, this retracement is rather strong, rather bullish. You do see some unhealthy order flow here at the very high, the supply, and then price pushes bearish again very fast. So this is a good sign for us, obviously. So that is it, right? Like, you need to really be paying attention to these areas. It is very crucial and important, because if you understand the concept between aggressive and versus non-aggressive pricing, you can then understand how to react in and around those markets, right? Last thing I want to mention is when price is retracing, right, and you notice there's aggressive pricing, and then there's this like bad order flow, unhealthy order flow. You know, be careful, obviously, because unhealthy order flow like this tells us that prices may not break above structure. We are looking for a sign of impulsive move to the downside to break that next low like this, and then wait for unhealthy order flow to build again, only to look for prices to strike at again to the downside, right? Something like this. Oops, right here, right? All this is unhealthy order flow. Prices retraces, taps our area, and then takes off like this. Yeah, so this is how you do it, right? If you go on your charts now, look at your areas of where price is trending, where price is breaking structure, and you'll start to understand how order flow is choppy, right? When it's retracing to you, that's what we want. That's what we want if we're trending in the correct market, if we're going in the correct direction. Otherwise, you'll be able to spot this everywhere. You'll be able to decipher and start, choosing the correct direction towards your direction, obviously, whenever you're trading. So definitely go mark those charts out, guys, and see to this that, test back test this and see how it works, because it can help you in the long run, obviously. Last example here, I just want to show you here. As you see, when we had an impulsive move to the downside, look at this behavior, how we have such a nasty order flow happening here, right? Just unhealthy, and all the buyers and sellers got taken out here. There was so much liquidity that was building here for this price to just push bearish quickly to take out the money, take out their liquidity. All right, that's all I want to show you guys. So until then, I'll see you in the next video.